So today we just had the Q2 delivery numbers for Tesla released, and I want to go ahead and break down those numbers, but also talk about what are some things that we may end up seeing with Tesla down the line. So if you're someone that invests in Tesla in the long term, or you also trade Tesla in the short term, make sure to watch this video in its entirety because I want to cover a couple of things that we want to be aware of. Now I want to go ahead and log into Twitter and share some interesting tweets with you guys, starting off with this tweet over here by me, just showing you guys that I literally couldn't sleep because I had nightmares that the Tesla delivery numbers came out extremely bad, and I had to wake up and make sure that that was just a bad dream, which just kind of shows you guys how passionate I am for Tesla in general, because considering the fact that most people, their nightmares consist of either running away from an evil monster or, getting killed, and my nightmares are, Tesla actually doing bad. But with that said, I want to share this, this actual tweet that's important to really pay attention to. Now, this tweet by Tesla shows the delivery numbers for Q2, and we delivered over 466,000 vehicles for Q2 of 2023, which is absolutely insane because this broke the expectations of Wall Street for the delivery numbers. And I want to share this also, this graph that I also found on Twitter as well, where we see year over year and quarter over quarter all the delivery numbers that we've had so far. And it's just honestly amazing to see that Tesla in the first 2 quarters almost is delivering 1 million vehicles, which is absolutely insane. Now there's this tweet by Farzad saying exponential growth is a hell of a drug, which is absolutely true. Now, though these delivery numbers are absolutely great, we also have to address some concerns that we're probably going to start hearing more of as we get closer to the earnings date for Tesla, which is estimated to be July 19th. So you want to save that date because obviously we want to pay attention to the fundamentals that end up coming out. However, one of the things I like doing, right, is always listening to what the other side has to say. I feel like too many times people are kind of in their own bubble and they only pay attention to what, the echo chamber is saying. And while I am definitely bullish on Tesla in the long term, I like to occasionally hear what the bears are saying. And so today in the Twitter space, after the delivery numbers came out, there was this argument from a bear saying, hey, yeah, these delivery numbers are absolutely good for Tesla, but the real question is, how far did profit margins have to diminish even further to actually make these delivery numbers come out, right? Because obviously we've had Tesla do a lot of price cuts, right? And so obviously one of the vehicles that sold the most were the Model 3s. And of course, if, there was a significant amount of price cuts for these Model 3s, well, yeah, we would have great delivery numbers, but, profit margins would diminish, right? Now, I definitely understand the concern from that bear, but we have to talk about something, right? Now, this is obviously something that I mentioned, months ago, right? And that it's just plain obvious that obviously if Tesla, reduces their prices for their vehicles, yeah, that's going to hurt profit margins, of course. But the thing is that Tesla has something called pricing power, right? And so one of the reasons why Tesla is obviously cutting or has cut prices in the past is so that they could obviously beat the competition who doesn't have pricing power. Now, why is Tesla, having to, cut prices? Well, we're in a bad economic environment, right? We're at a time where, the average interest rates for auto loans is around 8%. And, this is a quick anecdotal story, but I have a, cousin who's like paying 12% on a vehicle. That's not even a brand new vehicle. So that just goes to show you guys that it's just very expensive to kind of finance and buy a new Tesla these days, right? And so obviously in a bad economic, condition or the conditions that we're currently in, having the advantage of being able to have that pricing power to kind of lower your prices, well, that's really going to cut out a lot of the competitors who can't do that. Because of course, if we have the other competitors in the EV space cut their prices, maybe they'll get more deliveries, but they'll be at negative, margins, which is absolutely bad. And so I want to show you guys, the profit margins that we saw recently with Tesla. So, in the past, yeah, we've seen above 20%, but last time we saw Tesla dip down to around 13% when it comes to profit margins for Tesla. But when we take a look at Ford, right, legacy automakers like Ford, look at the profit margins for that. 1.75%. This is absolutely terrible. And so this is what I'm saying. Yeah, of course, Tesla's going to be able to continue delivering vehicles because of their pricing power. And that's not necessarily a bad thing. That's actually a good thing where, when there is potentially a recession going on, well, you have the, ability to actually, reduce profit margin. Yeah, that's going to hurt stocks, right? Or the actual, stock, right? And of course, people who are paying these high PE ratios, maybe it's going to have to be lowered because obviously earnings are lowered because of the profit margins, but at least you're able to survive the downswing of this economic cycle. And guess what? These cycles are very cyclical, right? It's a cycle. And so when things start to look good again, well, you don't necessarily have to, have prices so low. Tesla could just revise their prices and still be ahead of the competitors. And so one of the things we've seen in previous recessions is that the companies that can survive during the bad times are the ones who thrive when the times of the bad times are over, right? And so this is honestly a big advantage that Tesla has. But now looking at Tesla from a technical perspective, it's very reasonable to believe that after these great numbers coming out, we could see Tesla kind of potentially push forward a bit further, which would push us in this area where there's very little volume by price. And when there's little volume by price, well, that's where we see big movements in the stock. I say this over and over on the channel, specifically because, a lot of people are not aware of this, but when there's very little volume by price and there's a lot of buying pressure, well, that's going to really mess up the order books where the stock is going to have to go up higher. And so we could potentially get close again to that $300 level, which is definitely going to be really great news. However, we also have to be aware that as we get closer to the 19th, that's where we're probably going to see more selling pressure, as there's going to be a lot more individuals and investors who are skeptical about the profit margins that I mentioned a bit earlier. But I also want to share with you guys something that's honestly very unique for Tesla as opposed to a lot of the other mega cap companies. See, according to FINRA, 70% of the price action in the market is really driven up by institutional investors, right? Now, when we take a look at Tesla and we take a look at their institutional holdings, their institutional ownership is only 44%, which means that a large majority of people that participate in trading or investing in Tesla really comes from retail, right? And so this is honestly an advantage because, when there's a lot of ownership from institutional investors, well, if one institutional investor offloads and then another one offloads and another, it could cause this domino effect where we have a ton of selling, right? But we don't have that with Tesla because there's a large amount of retail that owns Tesla, right? And so this is why it's very good to honestly have a company that's really held by retail mostly as opposed to institutional investors. For example, when we look at another mega cap stock like Microsoft, we see a completely different story. For example, just look at this over here. We see that 74% of the institutional ownership, or 74% is held by institutional investors. And so basically, if we have just, some bad economic data that comes out or any data that comes out for Microsoft that could seem bad, well, we could see institutional investors who own a majority of Microsoft really influence the price action because we could have one major, institution sell and another one sell and another one sell. And that could just, cause Microsoft to plummet very rapidly as opposed to retail who tends to hold, things a little bit longer and they don't make the quick judgments that, institutional investors do based on certain data. And so again, this is a really good point for Tesla, and this is why it's honestly great because it leaves Tesla kind of further away from potential manipulation. Not saying that these institutional investors could be, well, I mean, I'm pretty sure some of them do manipulate things, but the point is this is really good for Tesla. And so for the short term, this is very bullish for Tesla. However, I do want to provide a little bit of a warning that as we get closer to the earnings date, we're going to start hearing more and more of the subject of profit margins. And so that's where we're probably going to see some more selling pressure as we get closer to the earnings date. However, in my opinion, I don't think that, profit margins just softening a bit is too much of an issue for Tesla, especially because we've heard Elon Musk say in previous earnings call that, hey, just with the FSD alone, once autonomous driving becomes a thing, well, this could spark up even more revenue for Tesla where they just have a monthly subscription from a lot of individuals who pay to, obviously have access to, fully self-driving in the future, right? And of course, we know that with all these delivery sales from Tesla, this puts Tesla at a further technical, logical advantage, right? With being able to get closer to fully autonomous vehicles as opposed to other vehicles because of the data that they get from drivers. Because of course, with more deliveries, that means that there's more Teslas on the road, and with more Teslas on the road, that means that there's more people that potentially are using FSD, which garners more data to help FSD improve, and thus makes Tesla much more closer than any other competitor when it comes to achieving the goal of becoming fully autonomous vehicles. And so, this is really good for Tesla, and this is why, in the long term, I'm very bullish for Tesla. And, we've seen it over and over again, Wall Street getting Tesla wrong. But at the end of the day, guys, you have to always trade and then, invest in whatever you guys see value. And you should never trade or invest based on anyone else's opinion, including myself. All I try to do is try to provide some context and my viewpoints. But again, at the end of the day, you have to do your own due diligence. But with that being said, guys, hopefully you enjoyed this video. Make sure to like and subscribe if you haven't done so already. And before you go, guys, make sure to watch this next video right over here. And I'll see you guys on that next video. Take care.